Hey there, happy Monday. Brian Sinkoff, Associate Broker, Muccio Real Estate Group. And alongside me is my man,
Drew Aiello.
He is from Fairway Independent Mortgage. And give me a thumbs up if you can hear me out there. We got the mic on, making sure that works. Feel free. Technology here in the Muccio Real Estate offices in Loudonville, New York. All right, Drew, we do this every month.
We're a little delinquent.
We missed last month. We had
some personal events.
Had some issues, some personal events, but we're all good in the hood right now. So here we are. We try to do this every month, all jokes aside, and we talk a little bit about the housing market. We talk about the interest rates. We talk about sort of how the economy is impacting the housing market, and we welcome your questions. We do have a few questions that people submitted here earlier today. If you want to ask a question to us live as well, feel free to do so. Drew, the biggest question everybody asks, and they ask it every single day.
All the time.
The interest rates.
Interest rates, because if you watch CNBC or some of the major outlets out there, you'll hear the opposite of what's going on. I don't know why, but it just is. I've been following CNBC for the last 20 years, and the real estate person that's on that show always says the opposite of what's happening in the housing market, because I obviously know from you what's really going on in the housing market. Or could be just, real estate's location, 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 and what's happening nationwide isn't happening here, because as I'm sure we're going to talk about, multiple offers like crazy these days on houses. But my specialty obviously is interest rates and mortgages, and regardless of what the Fed is doing right now, meaning they are bumping interest rates. They bumped a quarter point. A lot of people think because the Fed bumps interest rates that interest rates on mortgages are going up.
Two different things.
Two different things. They're bumping short-term interest rates. Mortgage rates are controlled by the market-driven forces. And the key with knowing which direction interest rates are going is inflation. If you follow inflation, you'll know where mortgage rates are going. And right now, as we saw last week and the week before with some key inflation reports, inflation is going down. Maybe it's not going down as fast as we would like, but it's going down. So in turn, mortgage rates have been trending down, even though the Fed bumped rates 2 weeks ago. So that is a misnomer that I like to clear up right away so people understand. Even though the Fed is bumping rates, they're doing it to curb inflation. What they're doing is working. They probably went too far, to be honest with you. So inflation is slowly but surely coming down. And if you want to mark your calendar, if we could try to do this show next time, right about May 10th, circle May 10th, I think you're going to see a key inflation report come out, and you're going to see interest rates take a big tumble lower on that day.
And, when we talk about the interest rates, we're talking about credit cards, car loans, things of that nature, personal loans. Yeah, not necessarily what the interest rates would be on mortgages. So those are two separate lanes, as we like to say in the business. Stay in your lane. A
lot of times you see the Fed bump rates and mortgage rates come down the same day.
Right.
So you would think the opposite would happen, but it's not true.
So
if they're controlling inflation, you'll see mortgage rates come down. That's what we're seeing now.
So Fed interest rate, not the same as mortgage rate.
Correct.
That's sort of today's headline, if you will.
Correct.
Now, everybody always asks, I was at the gym this morning and two people asked, Sinkoff, how's the market?
Look at these pipes. Look at these pipes, people.
What? Shout out to Metabolic in the house. Let's go. Anyway, sorry.
Too much creatine?
I don't take any of that crap. I'm not into the side note. We're going to digress here. I'm not into the creatine, the powders. Nothing against it. I'm also not into the fueling stuff. That stuff gives. I already drink coffee. That stuff. Do you think I need to be more hyper?
Yeah.
I mean, that stuff gives me the shakes. Anyway, I digress. So I literally, and I'm not even joking, I get asked this question at least once a day. Brian, how's the housing market? And it's because people hear the doom and gloom. You hear about the high interest rates, the high rates. But let me give you some, I like to say these are real world examples.
Here's speaking. Now you just triggered something, so I'm
Yes.
sorry to interrupt. But last week, I think housing prices came down 0.2%. Big station with 4 letters, I'm not going to say the name again, went nuts saying, "Oh, we're declining. We're declining. We're declining." 0.2%, people. We're still up like 6% year over year.
Yeah. So, right. I mean, and it was 10 to 20% during the COVID era, those
Right.
2 or 3 years, which is not sustainable and it wasn't healthy. So, how's the housing market? I'm just going to tell you real world examples, not something I read, not something I heard from a friend, not something that's happening in Florida, Las Vegas, or California, because those are totally separate animals. And we've talked about how the capital region is sort of insulated, where we never really hit the lows. We didn't get too crazy high like some of those other areas did. Florida, before in 2008. So I just am going to give you my real world experience. I took a bunch of buyers out this weekend and submitted offers on houses. Not one of them we submitted at asking price.
Right.
One of the houses had 25 people in the open house. I'm again representing the buyer. There were 25 people in the open house. There was 6 offers. We're one of 6. We don't know if we got the house yet. We went way over the asking price. Way over.
And it's not, when you say that though, it's not like they're paying too much for the
No.
house.
No,
People misunderstand.
Correct.
When you go over ask.
Right, and one of the things I do as a realtor, and especially as a buyer's agent, I'm always concerned. And in fact, one of my clients, I had to talk down. They wanted to go higher. I said, no, we're not going higher because we worry about appraisal.
Right.
So every time when I make an offer over the asking price, the market is fluid. It's constantly changing, right? So we don't know like what it's going to appraise for because that market is changing. But what I like to do is I like to go back 2 or 3 months only. The days of going back 6 months to a year are over because the market changed.
In this market.
Correct. I go back 2 to 3 months and I look at what's sold, what's pending, and what's active based on the square footage, bedrooms and baths in the particular school district of the house we're making the offer on. And I look at that and I go, I'm protecting my client because I don't want them to overpay, nor do I want the deal to fall apart. Right. Because if the thing doesn't appraise, everybody always asks this question: what happens when a house doesn't appraise, Drew?
We got a problem.
Yeah.
The bank can't finance it, and people may not have the cash to make up the difference.
So the buyers would have to make up the difference. If the bank says the house is $310, we make an offer. The house appraises for $310, make an offer for $340. The seller or the buyer would have to bring $30,000 of their own money to the closing table, or the seller would have to drop their price to accept what the house appraised for, meet somewhere in the middle.
The bank will always go off the lower of the two.
Correct.
Purchase price or the appraised value.
Correct. So I always check the comps to make sure that we are in that range of where it's going to appraise, because I don't want to just make a willy-nilly offer knowing the house isn't going to appraise. So I think that's a great point, Drew, that you bring up, that we're not just offering over the asking and we're just pulling numbers out of the out of the air.
Can't be willy-nilly.
Right,
making up numbers.
Because it's got to appraise, and I have told my clients that, especially one this weekend. He wanted to go way over the asking price, and I actually had to talk him down 20 grand and say, let's not go that high, let's go here. Ended up getting the house, by the way.
Nice.
So ended up getting the house, and we're waiting on another one, and they went over asking as well, but again, within the reason. Yeah, we're keeping our fingers crossed. We might actually hear in the middle of this Facebook Live if we got the deal or not. If we didn't get the deal, the Facebook Live's over, and that's the end of that for today.
I'll take your shoelaces away.
Yeah. All right, so those are sort of real world examples of how the market is doing. If you're a seller, you're always in a good spot, and you're especially in a good spot in this market.
Right, and I would agree. And I think we've talked about this before, going to continue to talk about it. February was an awful month for interest rates. Every single day in February went like this for interest rates. Then March, they actually trended down. So far this month, obviously it's really only the first day of the new month. It's starting out to be pretty well. Rates are coming down. They've come down over a point in the last 5-6 weeks. But as we said before, it's really corny. I'll say it again, though. You date the rate, you marry the house. I truly believe that
was
the
my
second
line,
half
but
of this
okay.
year, right, rates are really going to go down, which means don't. I'm not telling people wait until the second half of the year to buy, because some people are on the sidelines right now because rates are a little bit elevated. And now I think is your time to purchase, because when rates go down the second half of this year, more people are going to come into the market, more people are going to come off the sidelines, and then the competition is going to be even worse than it already is. I mean, 27 showings is out of control. So what we do in this environment, we do a couple things. One is we look at adjustable rate mortgages.
Which is an ARM.
It's an ARM, A-R-M, adjustable rate mortgages. You say the word, a lot of people cringe. But they cringe because back in 2000, 2005, they were misused and abused and not used properly. That really weird hybrid programs, interest only, things like that. That's all gone away. Now the arm that I have particularly is fixed for 7 years. I personally don't think you're going to have the loan more than 12 or 18 months from now. So try to get the lowest rate you possibly can to make the house as affordable as possible, with the intent that in the next 12 to 18 months you're probably going to refinance. And anybody that buys with me in this environment, I'll waive all lender fees when they go to refinance in a year or 18 months. So
that's phenomenal.
It's great for the buyers. Try to get the house. That's the most important thing. Don't worry too much about the rate. Obviously, we'll do the best we can, but look at adjustable rate mortgages in this environment. The other thing that
back to back.
You know what? Imagine if that was the offer.
One was not.
Your listeners could hear and live.
That would be unbelievable.
You'd be like
until it was bad.
Like listing LA or whatever.
Yeah, $1 million listing. We call it $310,000 listing.
Is this Josh? So another thing we do is we try to make offers as competitive as possible. Instead of doing a pre-approval or pre-qualification, we try to get a full-blown commitment letter for people before they even find a house. So that if there's 7 offers, someone has a pre-approval, someone has a pre-qualification, but we come with a commitment letter, which means fully underwritten by the underwriter, pay stubs, W-2s, tax returns, bank statements, everything's done. And in the commitment letter, it'll say that if for some reason we can't come to the closing with our financing, we'll pay cash for that property, or we'll give the seller $10,000 and they can go sell the property to somebody else. So that's our cash guarantee program that A, competes with cash offers, and B, beats out the competition when the offers are tight.
Yep.
So.
And that helped with the offer that did get accepted for my clients. The listing agent reached out to Drew, asked about the financing, and because Drew's letter was rock solid. And look, I'm going to toot Drew's horn here and embarrass him a little bit. Let's see if he turns red. Drew is one of these guys where, and I'm not even kidding, and I'm not just saying this to earn brownie points here. I've dealt with many lenders, I've dealt with many realtors. When I give an offer with the pre-qualification from Drew, that listing agent knows this is getting to the closing table and it's closing. It's not going to fall apart. He's not going to pre-qualify someone just because he answered the phone and they seem like a good buyer. Drew vets them, makes sure they're pre-qualified. And if you're thinking about buying right now, you can give me a ring, direct message me, whatever, and we're going to get you hooked up with Drew because he will take care of you. And if he can't, he'll tell you. I mean, I think one of the things is best realtor match with a great mortgage lender. Thanks, Laura, my mother-in-law. One of the things about, I think, the way I do business, and I know Drew's the exact same way, which was why I aligned myself with Drew, is that we're going to tell it like it is. We're going to be honest with people. We're not yes men. If you're a good buyer, we're going to tell you if you're a good buyer. If you're a buyer that needs some work, can't maybe buy right now, we're going to tell you that, because the worst thing we could do is he could give you a pre-qual letter that's not really valid. I drive around Miss Daisy and show you houses, and you can't buy the house. And I can't tell you how many times I've been on the listing side, and that has happened where people look at the house And then they say, well, they got to call their lender. And I'm like, well, you didn't call the lender before you started showing them these houses. That's like a waste of my time. It's a waste of the seller's time who had to vacate the property with their dogs and their kids. And you're not even bringing someone that's pre-qualified. So when you're with Drew, it's as good as gold. And Drew...
You never want to fall in love with a house that you can't buy.
Correct.
That's got to be the worst feeling. Because
Correct.
as guys, we're married guys, you never want your wife to be upset with you based on them falling in love with something that you can't come through with, right? You never want to let people down. You never want to have their dreams burst. So
great point.
That's probably one of the worst, and that's like non-financial. That's more like the emotional
It's
side.
Absolutely.
That is awful.
And I have had many, the buyers are pre-qualified at $350,000. They want to look at a $400,000 house, hoping, they win the lottery. And I say, we're not looking. You can't buy that as much as you want to. It's not in your budget. And that, I think, we're cognizant of the fact that we have to look out for you as a client, and we have to look out for the buyers and even the sellers and make sure that qualified people are getting into homes. And as a listing agent, I'm making sure that pre-qualified people are even looking at said property.
Right. And there's a lot of interesting programs these days. Some lending has tightened, some has loosened. I have a few homeowners right now.
Few? You just sounded like Peter Brady, and it's time to change.
I just went to 7th grade for some reason. I have a few clients right now that are actually using bank statement programs.
Say what? What you talking about, Willis?
Right.
Speaking of the 80s.
Yeah, I know. They for some reason they're self-employed. They don't show enough income on their tax returns, or they have good cash flow, but not a lot of net income at the end of the day. We're using bank statements, 12 months or 24 months of bank statements, and using that monthly cash flow to qualify them for a mortgage. You're not going to get 97% financing, but you can still get 80 or 90% financing using bank statements and not even tax returns. And it's not a crazy program. It's not like 2000, 2005. You have to have decent credit, good cash flow, some good reserves, things like that. And it's a great program. So don't be shy if you're looking to try to be a homeowner and buy in this market. Talk to a mortgage professional first. Get your ducks in a row, and then talk to a real estate agent.
All right, we got a question here from Jay. Jay wants to know, Brian, I'll read it. Brian, in this market, when purchasing a home, will I be overpaying when I'm making an offer?
Oh,
Jay, that's a great question.
Good question.
That's an it depends answer. Okay. So let's give you the easiest scenario. If the house is on the market for a day or two and you like the home, chances are what? Everyone else that looked at the home has also liked the home, right? If the house has been on the market, and I like to say in this market, 14 days equals 1 month. Right. Okay? Right. So 2 weeks, time on market, 2 weeks equals 1 month in the olden days when stuff sold, in a normal, now we're stuff selling in 3 to 8 days. Back then it was, pre-COVID, it was, 14 to 28. Okay. So I like to say, 2 weeks equals 1 month. So if a house has been on the market for 2 weeks, AKA 1 month, do you have to pay the asking price? You might not. Right. You may certainly not have to go over the asking, because as I've said, if a house is listed for $300, it's been on the market for 3 days, guess what the house is not worth? $300. Why? Because it would have sold by now at $300. It's kind of common sense, people. So if a house is on the market and it just hit the market, even if we think it's overpriced, like I look at it, I see the comps, I look at the house, I go, I don't think the house is worth, let's just use $300. The problem is in that scenario, and to answer Jay's question, the problem is the seller and the listing agent thinks it's worth $300. So if the house just hits the market and it's a $300,000 house, doesn't matter what I think or you as the buyer thinks or you as the buyer thinks, the seller and the listing agent think that. And in this market, right, where stuff is selling over asking with multiple offers, those sellers are probably going to think their house is going to be in that wheelhouse as well. So probably not a time to come in under asking price or asking price if the house hits the market, even though we may think it's not worth it. You wait, 2 weeks, and then, there's a chance you can get it for less than asking. But again, if it's on the market for 2 weeks, aka a month, what's wrong with the house, right?
I'll take the next one. Looks like it's for me. When it comes to credit, someone thinks they may not have great credit. That's okay, because first of all, you can go down to a 580 credit score with FHA these days. Second of all, if your credit needs a little work, we have a free credit repair service that can try to get your credit from point A to point B. So maybe today isn't the time for you to be a buyer, but maybe 3 months or 6 months from now, you'll be a buyer.
Yep.
And you don't need all of your own funds to buy a house. You can get it gifted. You can borrow it out of your 401k. Sometimes I've seen employers have employee programs where the company will grant them money to help buy a house. So don't feel like you need 10% or 20% down. There's a lot of programs out there like FHA, USDA, Sunny Mae, where it's almost 100% financing.
And 3.5 is pretty typical.
3.5 on FHA and a first-time home buyer is very typical.
Mm-hmm. It's a very good point as far as that goes.
A lot of people think they need 20% down, and that's a huge myth in the home buying process.
That was what our parents had in the 80s, and the interest rates were 15%.
Correct.
Literally 15% in the mid 80s.
Yeah. I remember when we had a 1-year adjustable at 9.5%. There was a line around the building waiting for that because they had just come down from 18, 16, 15. Now we have a 9.5% adjustable, and everybody went bananas on how low that was.
Right.
Now we get to 7, and the world's going to end.
Right, 6. That's because it was 2.98%. Right? What was it?
Well,
Did you have under 3?
Oh, we were
2 years ago.
We had 30-year fixed rate under 3%.
I mean, that's stealing money at that point.
That's if you think about it, if you're getting a rate at 3 and inflation's at 6, doing pretty good. You have a nice 3% arbitrage on your money in that scenario.
Right.
Which it's strange. Not always happens, but that's the way it was.
Anything else? We'll see if we have any other questions. I can check. I had a couple things written down. Drew, anything you wanted to add that you had written down, and then we'll wrap it up.
I think in this environment, you're in the driver's seat if you can get a house. Don't worry. Don't be too concerned about the interest rates where they are right now, because that's just temporary. I can't say guarantee, but I bet you dollars to donuts in the next 12 to 18 months you'll probably refinance. So find the house, get the house. Let me worry about the rate in the future. And I'll get you, in the meantime, I'll get you the best rate we possibly can right now. And
again, I mean, I think it's important, as Drew said, with the interest rates. At some point in the future, you're going to refinance, and the market is what it is. There's kind of nothing we can do about it.
There's no supply. We need sellers. We need people. If you're listening, we need houses on the market. The supply is at the lowest it's ever been right now. Normal market's 4.5 months worth of supply.
Yes.
Right now it's like 1.2 months. So
right.
It's ridiculous. So if you're a seller out there
and you're on the fence,
call my friend Brian, get that house on the market.
So
there's buyers out there.
Sell it with Sinkoff, baby. All right, Drew, give him your information and then we'll wrap her up.
Drew Aiello, branch manager, Fairway Independent Mortgage. Just go to drewsteam.com.
Or you can message me, you can text me, you can email me, and again, Brian Sinkoff, sellitwithsinkoff.com, Brian at mucciogroup.com, and phone number 518-364-9497. You guys know how to get in touch with me, for God's sakes.
You're the man. You're the legend.
Well,
everybody knows you.
Yeah, ish. For better or worse. Between you and me, I rock the mic so viciously. Beastie Boys. Really? Thank you. Yeah.
Have a great day, everybody.
Yeah, thank you so much for watching. We really appreciate it. Any questions? I will actually end with this. Like Drew said, this is actually, I've got my train of thought back. Drew said, maybe now is not the right time. We're going to help you. Maybe your credit's not in a great spot. I say this to every buyer, every seller. I'm a realtor today. I'm a realtor in 1 hour, in 1 day, in 1 month, in 1 year. Same thing with this guy. He's been doing this over 20, almost 30 years. We're not going anywhere. So if you're not ready, we're not ready. When you're ready, You know how to reach us. That's how we're wrapping it up. So you guys have a great day, and gals, and have an enjoyable April, and we will talk to you.
NCAA finals tonight.
That's right. Let's go UConn.
Yep.